Despite the fact that most market participants interpreted the latest Fed policy announcement as more dovish than expected, hence the drop in the US dollar and US yields, Bitcoin markets saw "sell the fact" reaction, with the BTC price pulling back sharply and long liquidation spiking. BTC USD was last changing hands in the mid-$27,000s, having at one point been as low as the $26,600s, down around 2% over the last 24 hours as per CoinGecko. According to crypto derivatives analytics website CoinglassCom, around $60.2 million in Bitcoin futures long positions were liquidated in the first 2 hours after the Fed's policy announcement. Long liquidations for the day were last around $85 million, their highest level since the 8th of March. The Fed lifted its benchmark interest rate range by 25 bits per second to 4.75 to 5.0% as expected, but softened its language on the prospect of further hikes after acknowledging that recent U.S. bank troubles added downside risk to the economic outlook. Where it had before said, ongoing increases will be appropriate, it now says, some additional policy firming may be appropriate. The Fed left its quantitative tightening schedule, which allows $95 billion in maturing assets to roll of its balance sheet every month, unchanged, whilst noting that inflationary pressures remain elevated, an unsurprising acknowledgement in wake of recent upside inflation and jobs data surprises. Finally, the median prediction from the Fed's new dot plot showed the central bank sees interest rates ending the year at 5.1%, unchanged from the December dot plots and lower than consensus market expectations for 5.4%. This, combined with the Fed's shift in language, seemed to be enough to spur a dovish reaction in currency and bond markets. The US dollar index, DXY, was last down around 0.6% near 102.50, while the US 2-year yield fell 23 bits per second back under 4.0%.